Bitcoin is back. Of course it is. Bitcoin is back. I mean, granted, I've not looked at the chart since 3 o'clock this afternoon, but I did see that we hit 69K. So we did it, everybody. We did it. We actually finally got back to all-time highs. And before we dive into anything else, let's just take a moment to actually seriously congratulate ourselves, because it wasn't 2 years ago, and for the last at least 2 years, I suppose, we've had everyone saying now Bitcoin's not going to make it, it's going down to zero, what a waste of time. And yet here we are back at 69K. So we thought, yes, of course I have looked at the charts, and of course, sadly, that 69K didn't hold. But we're going to understand, we've got to go in and have a look at it and try and work out why that was, what that was, and what's going to happen next. And we'll try and delve through that as best as we can on this call. But I do want to, just stress we did do it. We have hit that all-time high. And hey, we might have only done it by a couple of $100. And if you were like me, watching it for the 30 minutes leading up, it was the hardest $200 to get. But yeah, we hit it. Depends which exchange you look at. I was looking at the Binance chart. 69,215. I think someone up to about 340. But that's it. We no longer have to refer to October, November 2021. We can talk about March 24 as being the time that Bitcoin held its all-time high. So I think that is something to, I was going to use the word honor. That's probably not the right term, but it's something to note. It's something, a lot of us have, been wanting, willing to necessarily happen. Yet at the same time, in that perverse kind of thing, we kind of want it to dump as well, because I'm sure some of you have a little bit left on the sides. There's some buying opportunities to get presented by Bitcoin dumping. And even if you are fully engaged within the market, we need that pullback for that healthy kind of structure. So we're going to delve into all of that today. We're going to have a look at it. For the astute members of you, you'll have noticed I actually did change my thumbnail. The Avenger call strikes again. And so I thought it was only appropriate to at least edit it a little bit. But then on top of us hitting the all-time high, I went this morning from knowing what I wanted to talk about to then assuming we were going to hit all-time highs, to changing what I was going to talk about to the last 3 hours, where we're down at like 61,000. So yeah, pretty interesting. Nobody said they can't hear me. Nobody said the sound is poor. So I'm assuming that's all good. So let's just dive straight in. We're going to move that over there. There we go. Okay, let's get the charts up. So this is it. This is the chart. And I did have the green line on this chart for about a week now, because 69,000 was the previous all-time height. And this is the kind of the main chart I have on my desktop showing. So I just want to see if we're any closer. And let's just zoom in. For those of you that really need to know the exact time it happened, there we go. 3 o'clock on the nose. We got to, as I said, 69,215. If you zoom in close enough, that is what it came out at. But immediately from then, and aggressively from then, we saw a correction. Now, what caused that correction? That's something we're going to talk about later on. But it has been fairly aggressive. I would say necessary, but fairly aggressive for that correction to come along. And just bear in mind, what have we really done? We've effectively just recovered the last 2 days. We've gone back into the range that we found ourselves over the weekend, and back at a level that we were pretty joyful to be at on close of trading, traditional trading on Friday. So I don't think it's necessarily the end of the world yet, and I don't think it's time to give up. But if retail have finally come back into crypto, well, we've certainly gone and scared the shit out of them again, haven't we? So yeah, we might be making them run to the hills for a little bit longer. Now, altcoins had been doing some particularly good run-ups. My personal favorite, Polkadot, had been flying recently, getting as high as about $10.70. But we have seen that correction again with Polkadot today, falling actually all the way down to $8, but making that recovery. But again, potentially much needed. And a lot is going to depend, when we look at it on the charts with the EMAs and everything else, we can kind of get a better picture, but on where this candle closes and what it actually looks like. But at the moment, if it was to close like this, I don't think it's necessarily anything to worry about, but it's something that we will need to watch over the next couple of days. Moving across to Casper. So I talked about this in Discord earlier, and I think a few of you agreed. It looks a little bit more sinister on the 12-hour. But for those of you that didn't see it, what we were talking about, unfortunately, was it's not very good. That kind of double top level there. But actually, I was more just very disappointed with this price action here. You know, this is 4 or 5 days worth of price action, and what we've seen certainly with Bitcoin, a lot of other altcoins, yeah, okay, mainly meme generated, was actually making gains and climbing. And yet, unfortunately for Casper, it was heading down to the neckline here, and then we've seen it smash all the way through. I know that James in Discord kind of said he was expecting 13 cents and a half. That's kind of where we're at the moment. It's actually gone all the way down to around about 12 cents. So for anyone that was looking to get back into Casper or to fill up on some casters, potentially an ideal buying opportunity there. And then the other one that we normally look at, oh, there's BitTensor here. I don't know where my Ethereum one's gone. I used to have Ethereum. But BitTensor, again, had a bit of a move up today. I got my views on that. If you have a look on some of the exchanges, pretty much came after the announcement that Simon was buying some more BitTensor. So maybe the market was a little bit thin in just Simon buying 726 BitTensor, I think he said. But also the rest of RT potentially filling some extra bags themselves. And then, with the correction that's happened. But BitTensor's not suffered like everyone else has because it had that nice run up beforehand. We're actually only down about 1.5% at the moment. And across the board, we're kind of looking at high single figures to low double figures for the majority of tokens out there. Not even the mighty, no, sorry, I don't. Pepe. Yeah, Pepe's down 17% today. Although the gains that we've been seeing on some of these meme coins, I don't think that's necessarily a bad thing. Anyway, what else are we going to talk about today? Could cover a little bit of the news as brief as we can. I've got some great questions that have been asked of me through the question sheet, so thanks for those. We'll go through those. And yeah, we'll just see where we get to. I got a feeling we're going to talk a lot about price, but if you've got any thoughts, got any questions, particularly about where things are happening, why things are happening, where you see the future going, then feel free to drop them in chat. We'll have a look. There's a little poll up there just for a bit of fun in terms of what we think may happen. Thank you for the 10 of you that already contributed to that. But yeah, so some quick news. I'm not going to go through the articles, but some things we may have missed whilst we were waiting for all-time high. So yesterday, the SEC has pushed back the upcoming Ethereum ETF proposals. So BlackRock and Fidelity were up next. They were due sometime this month. However, they have both been pushed back towards, I think it is May. It might be end of April, beginning of May. But what is actually more important now is it must be towards the end of May, actually, because the next one that's up, which I think is Van Eyck, I'll have a look. In this little bit here. Yeah, Van Eyck Ethereum ETF. That one's up next. But this is what's more important. Yes, we do have at the end of this month, we got the third deadline. So if you remember the ETF proposals, you file it, you get first deadline, second deadline, third deadline. Basically, at those opportunities, the SEC can either say approved, denied, or delayed. But the final deadline is actually now coming up at the 23rd of May. And that'll be the first one that gets its deadline. So that's going to be the first real indication of whether or not we're going to get an Ethereum ETF. Now, my view on this hasn't really changed. I think the SEC have kind of backed themselves into a very difficult corner because they can't actually define what Ethereum is. They have not been able to prove it's a security, and nobody else has been able to prove it's anything else at the moment. So how they can then go ahead and approve that, I just don't see it. Not unless there's a major shift in terms of policy and how they're defining some of those. And of course, they're tying themselves up with knots with the 67 tokens that are out there and exchanges that have been in breach of securities violations because they've been trading them. And if they suddenly start to call Ethereum not a security so they can get an ETF through, then they're going to have some problems with a lot of those legal. So again, bit of a mess for them. Something to figure out. Most importantly for us, though, end of May. End of May is what we need to be looking at unless a narrative shift is changing. And of course, I'll keep you up to date with that if and when it does. For those of you based in the UK, some pretty scary news that has come out, again, completely under the radar. Nobody I've seen talking about this. But the UK authorities will soon have fewer restrictions when seizing crypto. So a law was passed at the end of February that basically said from the 26th of April, the UK economic crime legislation will include civil recovery orders for confiscated crypto assets. Now this, to be clear, is any crypto assets that you foolishly keep on a centralized exchange. They will now have the powers to engage with that exchange and take them back. Now, I don't know how that's going to work, I'll be honest, with exchanges that may be based in other countries and how that needs to be ironed out. But the fact of the matter is they potentially are coming for your crypto, which is another reason why we always say, not your keys, not your crypto. Whatever they're a necessary evil centralized exchanges. Of course they are, but don't keep anything on there. You absolutely don't have to. I'll be honest, I still have a little bit on KuCoin Manta, and I'm trying to find somewhere to put it. I was going to stake it, but it's particularly weird and complicated. I won't bore you anybody with that. So that does need to move, but everything else is at a hardware wallet somewhere. Sorry, I just read a text and the word somewhere popped up. It's in a hardware wallet, secure elsewhere. So yeah, this is just another view. And bearing in mind that the UK said that they want to be, the crypto hub of Europe, as in somewhere that people would feel comfortable using cryptocurrencies, legislation like this isn't going to help. Okay, I get it. It may be for people that have committed crimes and maybe they don't deserve to keep their crypto. But the whole point of crypto, let's face it, is that it is decentralized. Okay, it's our little finger to the banks, the governments, and everything else. So yeah, just bear that one in mind. Forgot to say hello to everyone in the chat, but hope you're all good. Hope you're all well. Last one. And again, I'm not necessarily going to go through with this, but for any of you that have been checking out Discord earlier on today, there was a little bit of a comment I made here, just where we're sitting with some of the things. And one of the key indicators that we're potentially going to be seeing some extreme volatility is the open interest. Now, the open interest is effectively, the culmination of longs and shorts that are currently open, as you would expect. And as that gets to certain levels, there's a lot of people taking a lot of risk, and then market makers, well, they just love to get paid. And so they try and take advantage of that. Now, this obviously came out 14 hours ago. It certainly came out before the drop. It came out before the all-time high. And we were talking about Discord a little bit before then, which is why it felt like it was worth talking about. But we've kind of already seen the volatility. We've seen maybe a little bit more fear come in, but I think it's probably just easier to get it up on Discord, wherever it was. Yeah, here it was. Feeling pretty mania-ish right now. That was the point I was trying to make. OI at record levels. I'll show you how much in a minute. Fear and greed currently still sits at 90. I've got a feeling that's going to go down tonight. Coinbase and Crypto.com apps are now in the top 20 for iPhone downloads. I think Vijay put that they were like 150 last week or something. So meme coins are pumping super aggressively. They certainly were. Sheep being like 400% in a week. Viewership, searches, engagement across all social media has been significantly up, and I've seen a lot of content creators commenting about that. And no sensible pullback. So it kind of did feel like we were creating ourselves a perfect storm, particularly heading into all-time high. And all those things, whilst they are very difficult to put a tangible element to them, it's just that boiling fog analogy. You put a fog in hot water, it's going to jump straight out. You put it in cold water and heat it up, and it's just going to boil itself to death. And it kind of feel like we were in that, and this was a much needed flush out, in my opinion. But just to give you some sort of like stats on this, and again, the article will be in Discord afterwards if you want to have a read of it. But the open interest yesterday hit 31 billion. Now, the last record was set on the April the 14th, 2021, and that was for 24 billion. So we're not just talking about just nudging over it. We're talking about absolutely smashing it. Now, why is that important? Well, the last time it did sit at 24.3 billion on April the 14th, within 12 days, we saw that massive crash from 63,500, sort of the peak that we had in April, all the way down to sub 50,000. And that was done within, 12 days, 2 weeks? And so, not saying that they're correlated in terms of, however many days it's going to take, we're going to fall the exact same way, but just saying that, sharp corrections do come off the back of that. That was approximately a 23% correction. Now, sadly, if you remember, that didn't stem the falling, and we kind of ranged around a bit till May, and then we collapsed all the way down to 30k before building ourselves back up. Not suggesting that could happen. In fact, I'm not commenting either way, but it was a 20% correction. 20% correction from 70,000. It's probably only going to take us down to about 50, 55, 56,000. So maybe 50,000, I don't feel that that would even be that much of a bloody nose. We've climbed that high. But certainly something to take a look at. Anyway, that's kind of the main news articles that I just wanted to kind of touch on this evening. what I'll do is I'm just going to jump straight into some of the questions. I'm kind of going to tackle them in a bit of a different order. So Chris, if you're on live, thanks for your question. Thoughts on this, Harry? It's on MEXC Coin and it's linked to XAI. The cryptocurrency in question is Inspect. I'm going to cover that one a little bit later on, if you don't mind, just to kind of like to cover those towards the end in case people can't stay for the whole call. They can, just pick that stuff up later. So I've got the tabs open. I won't forget about it. Sally's then put, could you possibly post your 4-year crypto cycle chart? I remember seeing it on the Avenger call, but I can't seem to find it. Thanks. Yep, no, so I will post it in Discord and I'll work out how to post a link so you can see it through TradingView. But for those of you that wonder what she's talking about, this. So I've had a few iterations of this chart, I'll be honest. I think it kind of, oh, not that one. No, it's none of those. I just gone and lost that chart. No, it's fine. So what this chart basically was just doing was just breaking out by year, just having a look at the gains. And I was trying to suggest, I'd taken this chart from other people and just built it into sort of one that had a lot of information on it, I suppose. But the 4-year cycle is what we're looking at here. But instead of just how many days and weeks may it be, what were those periods within each of the cycles? And we were suggesting year 1 being that build up, the build back of BTC. So pretty much, although everything moves, BTC seems to move faster. Year 2, BTC is still climbing, but there is a shift into the alts within that. Year 3 is that parabolic run where alts go absolutely crazy. And then year 4, we retreat to stables because that's kind of the bear market. And typically that's kind of following itself all the way through. There's a little key here, you can see it. The halving dates are represented by the diamonds. Actually, this one can move across because we now know it's going to, it's on the monthly chart, that's why. Just ignore that then. We now know it's going to be in and around the 18th to the 21st of April. And then the circles with the cycle tops, obviously ignore that one up there, but you can kind of see where the cycle tops are. And cycle bottoms are represented by the squares. Once you zoom in, they become a little bit more apparent. And it was just a case of, as simple as that, just to try and visualize. I'm someone that works off the charts a lot better if I can visualize it, where things are, and where did we spend all of last year? So we had the bear market in 2022, 2023, we had the Bitcoin recovery, and we did. Bitcoin moved. Yes, I get it. Some altcoins actually moved better than Bitcoin, but as a whole, Bitcoin generally moved forward, and we're moving into year 2. And I mean, I know some alts have taken off, but Bitcoin dominance is still incredibly high. So I think that we've still got, if you were to run it this way, Bitcoin's still probably the predominant. And then there's an opportunity to take the Bitcoin you had and move it into alts. So using your BTC pairs rather than your USD pairs, getting more bang for your buck, and then just converting those across. We don't know when that happens necessarily within the year. Typically, I would say it's within the last 6 months of the year. So it's at some stage. And to answer Adam's question, which I'm going to use that chart for, in your previous videos, you mentioned historically, after the halving, BTC dominance decreases in the market. How does the halving affect the price of BTC? Does it decrease as well, or is there no correlation? So it's going to be the next point I was going to make on here, just to sort of show you what we can do. Now, just ignore these squiggles here. I'll try and get it so that, let's get rid of that for starters. Try and get it as big as we can. What I'm going to do is I'm going to put the dominance on. So here's the Bitcoin dominance. So it's on a separate scale on the right hand side, but I'm not really going to adjust it. And I'll just try and zoom in and around, and hopefully that'll work. Now, obviously, in this year group, there were not that many cryptos. In the halving leading up to 2016, there were very few, 10, 20 type thing. Obviously, 2016, 2017, we saw that explosion. It kind of went to about 1,000. And then in the 2020, 2021, it was over 20,000. God knows how many there are now. But it still kind of works. So obviously, year 1, you have to look at the top of the chart. Now my face might be in the way, but year 1 is this orange box down here, where Bitcoin dominance, I mean, it kind of just 90 odd % going around. Then in year 2, we cross over. This is a halving year. We have that move up to in and around the halving. And then suddenly Bitcoin dominance starts to fall away. Not massively, but it does start to fall away, ranges out a little bit, but it has taken a step down as there is some sort of shift into alts. And then you can see in the year 3, suddenly alts take over and Bitcoin. We're not talking about price here, we're just talking about the market share, the dominance of Bitcoin gets eaten into as altcoins increase in value and they start to take up the overall market share. It comes all the way back down. Stables, people either flee the market completely into fiat, USDT, whatever, and that enables Bitcoin to recover its price, or those that I would suggest are ill-informed, and I say that very carefully, bearing in mind that MicroStrategy never sold any of theirs, so maybe they are better informed than me, actually. But in the bear markets, Bitcoin dominance does increase back up to levels, or starts that increase back up, as most people just leave the market. So money just leaves the market, which means that Bitcoin is able to gobble up the emptiness that creates, rather than people actually buying back into Bitcoin. I hope that makes sense. And then, yeah, we go back into year 1, we can see Bitcoin dominance is on the increase, kind of stays at high level. Year 2, we have that little bit of a drop back off, halving happens, the drop happens off, and then it starts to range a bit. Into year 3, falls away again. Year 4, pattern repeats. So that kind of helps. Now, to answer the other half of your question, Adam, in terms of how does that affect Bitcoin's price? No, actually, this is the Bitcoin chart. So let's get rid of the dominance again. And this is the Bitcoin chart. And you can kind of see, so all the blues are the halving events, okay? And actually, after every halving, Bitcoin price still goes up. Of course, I say of course it does. That's a stock to flow model. Obviously, the supply, because at each halving we reduce the supply of the block rewards by 50%. So that's supply and demand. The demand is still increasing. The supply is less. It just has a natural uptick in the price. But the reason the dominance goes down is just because people start to see that there is an opportunity to make more money, potentially, by diving into altcoins. And that's what it does. So Bitcoin price can still climb, which is why we see, Bitcoin's price, and we'll use the 2018 and the 2021, peaks right at the end of the market cycle. Now, throw it on. Let's see how much of a mess this makes. So, new price scale. Okay, pretty much the same months. So you can kind of see what I did here is I put total 2 on. So total 2 is the entire market cap minus Bitcoin. So we've got the Bitcoin price on the bars, and then we've got everything else. Now, yeah, okay. You could have a look at the bar chart there. It doesn't necessarily matter, because all I'm trying to see is actually in 2017, December 2017, when Bitcoin peaked, so did the rest of the market cap. So Ethereum and all the other altcoins also peaked that month. May not be in the same day, but that month, and then it started to fall away. And it kind of fell away, similar pattern to what Bitcoin did. If you look on the 2021, it looks the same, but actually Bitcoin peaked. It did. Sorry, Bitcoin peaked at the beginning of this month, and so did the total market cap. So I thought this green was it, but it gets ever so slightly higher in November. And so, yeah, same month that happens, and then it falls away. And even this, you can kind of see that wicked head and shoulders, and then obviously that happens. So hopefully that just emphasizes that there's no real correlation to halvings causing the price of Bitcoin to decrease. It's just the dominance that goes down. And it previously, and I've got to just caveat, we haven't had this halving yet, so we don't know what happens at this halving. Although some unique event has just happened, which we'll talk about later. But in the previous halvings, what we've had is we've had a run-up of dominance, Bitcoin into the halving. Then we've had a dip. Then it's kind of ranged and recovered a bit for the remainder of that year before falling away in the year 3 parabolic runs. That's what the dominance tells us. That's what's happened. This year is a little different. And I think the next question, we can go into that a little bit more. Just checking people are still there. No one's said anything since Tim, which is absolutely fine, because I'm obviously very captivating and your fingers just can't work at the same time as listening to me, and that's fine. I'm just making sure I'm not talking to myself, that's all. So the next question is from Luke. It's a little bit of a long one, and he even ends it with, I hope it makes sense. So let's hope it does make sense. With a future total market cap aimed to be anywhere between 7 to 12 trillion. That's what we're hoping for. Adam's waving. Nice to see you too. We'll hear you. We'll see you. Done. And that the additional 4 to 9 trillion comes from institutions via ETFs, i.e. BTC and Ethereum. I'm going to blow your mind with this in a second. Therefore, does that not mean that there are two markets to look at? A 5 to 10 trillion BTC and Ethereum market and a 2 trillion alt market, as only retail will go into alts again to any great depth, and we can't consider the percentage of the market of any one coin to be of the whole 7 to 12 trillion, as so much of that will be BTC and Ethereum. Or we say BTC and Ethereum count for 80% of institutions, plus a bit more for retail share, and then the bit left, which includes everything else, is so much smaller and much the same as the 3 trillion previously. Hope that makes sense. It kind of makes sense to me because I've read it twice, but I'm going to try and summarize it for those that are listening. Effectively, what you're suggesting is that 7 to 12 trillion dollar market cap is going to be so heavily weighted by ETFs, and we kind of know. I mean, I've not physically read them, but for those that are utilizing the ETFs, if it's a Bitcoin ETF, then the ETF provider has to spend that on Bitcoin. They can't just go, oh, well, I'll tell you what, Pepe's looking good, so guys, we're going to convert those shares into Pepe. No, it has to stay what it is. So what you're suggesting there is so much of the market cap is going to be tied into institutional ETFs. It's going to leave very little room for other players and retail to move the price when they do shift from BTC into other altcoins. And it's a good question. But let's have a look at that, because I realized I've kind of missed something else I wanted to talk about, so I'll come back to that later. But this is Dune.com. You can go in there, and it's good for analytics. We used it in the days of Wonderland and Time and Ohm, so if it looks vaguely familiar to some of the OGers in the chats, that's what it is. This one is somebody called Hill Doby. They've done a Bitcoin ETF. I'm going to straight out say I haven't verified every single bit of data within this. I know it's linked to Arkham's dashboard, which is sometimes what I use as well, and he's also got a list of all the ETF addresses, so it feels fairly switched up. Okay, ramble over. Right, what is the current market cap at the moment? The overall total market cap, over $2 trillion. What's the overall Bitcoin market cap? Well, before I started this call, I would have told you it was 1.3 trillion. Okay, it's not now. 1.2 trillion. Okay, 1.2 trillion. Just hey there, Jean. I hope you're okay. Just keep that figure in mind. 1.2 trillion. Okay. Now have a look at this. Right in the center of the screen, you got Bitcoin ETFs. You got the top, they hold 768, it's called 770 for cash, 1,000 Bitcoin. But at 63,000, that's actually only in crypto would you say that? That's only $52 billion worth. So of that, 1.3 trillion dollars of Bitcoin's market cap, the ETFs at this moment in time only hold 52 billion. Now let's just do some very quick maths and say that is pretty much 4%. Okay, that's around about 4% of the overall market cap, and that's not that much. So when we talk about a 7 to 12 trillion dollar market cap, yes, I think the ETFs will lead the way with this, but there is kind of a bit of a misconception at the moment, and maybe I'm partly to fault with that as well. But just because ETFs are involved, they don't have the lion's share of the market share. They have, collectively, trust me, they have a lot. 5% owned by anyone is a lot. Of course it is. But it's not as big as the wider side of it. And I appreciate there's a load of lost Bitcoin within that. There's the original Satoshi wallet of 1 million Bitcoins. And there's some plenty of OGs out there, MicroStrategy being one of them. So we are going to be chipping away at that market cap. But it still leaves plenty of room for that market cap to move, because it is being controlled either by OGs, retail, other institutions that aren't ETFs that may be looking to make a profit. So that sort of 80% that you may think is going to be part of the overall 7 to 12 trillion, unless something significantly changes, that just isn't going to be the case. And we're going to talk about supply squeeze in a moment. But I think it's probably a mathematical impossibility unless the ETFs start buying Bitcoin for an incredible amount of money and they just push the price up. But the other thing to bear in mind, because even that figure there of 52 billion is actually a bit misleading. And why is it misleading, you might ask? And that's because of Grayscale. So Grayscale are an ETF, but they didn't used to be. And they used to hold a shit ton of BTC. So what happened was when the ETFs were approved, Grayscale converted their GBTC into a Bitcoin ETF. Layman's terms. I'm sure it was a bit more complicated than that. And I'm going to use this section down here, assets under management, market share. No, I'm not using that one. This one above it. The on-chain holdings of Bitcoin ETFs in Bitcoin. As an example, I'm putting it as top of the screen so so my face isn't in the way of it. And we'll have a look. So, right, 11th of January, they were approved and they went live on the 13th, I believe, a couple of days later. So I'm restricted by my nervousness and shaking. I'm full of excitement and adrenaline, so I might not be able to hold it on perfectly, but I will try and get it. So at the very beginning, I can't quite get it at the very beginning, but if I did get it at the very beginning, everyone would be zero except for Grayscale. And Grayscale had, for want of a better, about 620,000 Bitcoin assets under management. Okay, so they had 620,000 Bitcoin. They were the largest holders of Bitcoin outside of the Satoshi wallet. So just bear that in mind. They had 620,000 before the ETFs were even a thing. And now the ETFs, including their amount, is 770,000. So it's only 150,000 Bitcoin have been introduced into the ETF, which is still an incredible amount. I'm not trying to suggest it isn't. Because I don't think it happened like for like swaps, but as the ETFs were buying, Grayscale was also selling, if you remember, and we spent weeks, when the market fell initially, when we were looking at 14, 15, 16, 20,000. I think it ever got as high as 20,000, 10,000 maybe. Bitcoin were being sold by Grayscale every day, and to pretty much every day the ETFs were buying it. So what's happened there? And look at this chart above it, the flows. Okay, so we got the 10th, and look, Grayscale, they're the purple ones below the line. They were doing the selling. Everybody else was buying it pretty much on those days. The gaps are obviously the weekends and the bank holidays, if you're wondering what they are. That's why you're typically in blocks of 5, except for where there was a bank holiday. Anyway, okay, so Grayscale ended up going down, and they are currently, as of yesterday, 421,000. So they've sold 200,000 worth. And the rest of them have effectively taken that and then added that 150,000. So Grayscale at the beginning, and I can't remember what the value of Bitcoin was back in January. I'm sure we can have a look as well. Bitcoin, December. Here we go. So we got to around about 45,000. Okay. So they had 620,000 times 45,000. Actually, let's have a look. So that was 45,000 times 620,000. Sorry if this is a bit of a long way around. So that was 2720. That was $28 billion worth. Am I maths right? Yeah, that's right. Okay. Obviously, the value of Bitcoin has gone up, but it's 150,000 that's been added, which is why there were a few articles earlier this week comparing the speed at which the Bitcoin ETFs crossed the $10 billion threshold versus gold. And for those of you who weren't aware, the Bitcoin or the gold ETFs, it took them 2 years to onboard $10 billion worth of net inflows into the gold ETFs. It took Bitcoin 6 weeks. As a matter of fact, it was last Friday, I think, where it crossed the threshold. As a matter of fact, I think it's this article here. That's a different one. Come back to that. And so, yeah, so it was actually just 10 billion. The long, tortuous point I'm effectively trying to make there, Luke, is actually these ETFs do not have the dominant share of the market. Yes, they were probably unlikely to sell, But that still leaves a significant amount that is likely to sell. Now, also at some stage, and these investors that are investing in the ETFs, they're not degenerate retailers. They're not wanting to hop in and hop out every two weeks or anything like that. But at some stage, they will want to take some profit, and the ETFs are going to have to work a way of how they're going to distribute that project, particularly if over time Bitcoin does increase significantly. The other thing to bear in mind is both MicroStrategy, with at the time of the peak of the last bull market, had around about 110,000 Bitcoin, and Grayscale with let's just call it 500,000, round that number down, they had around about 600,000 Bitcoin, and yet we still went from 69,000 down to 15,000 without those boys selling any of it. So that was a significant amount, well, similar proportion wise to the market share amount of Bitcoin, and yet we're still able to move it, and it's because of retail. And we've not wanted to drag this point out too far. The other thing that what the spot ETFs don't take into account whatsoever is those degenerate gamblers, okay? The leverage trading, the derivatives trading, the market makers, and how that drives the price. And it does drive the price. So there's that side of things that can just get hold of it and start to move it. So yes, I do see the ETFs providing some form of stability, and I do also see the ETF's value climbing. They're going to try and gobble up as much BTC as they can. We know that's going to drop by half in 6 weeks' time, less than 6 weeks, about 5 weeks now. But at the same time, there's still plenty of other products that are out there, or retailers that are just degenerates and trying to think they're better than the market and timing selling it at what they did perceive as peak times, that I think will enable us to see an alt season. Maybe Bitcoin dominance doesn't go down as far as we think it will, because there's a lot more staying. So I don't think the ETFs are going to sell within the next 12 months. I don't see Saylor selling. I call it Saylor. He's no longer the CEO. I don't see MicroStrategy selling in the next 6 months. I don't see Grayscale particularly selling too much. Yes, they may offset some to the ETFs. They might be getting some decent price for that. There's rumors that we're going to get announcements of nations confirming that they've been buying Bitcoin. And again, I don't see them selling. The likes of El Salvador, I don't see them selling. So yeah, dominance may stay higher than previous markets, but we've never seen it dip below 38%, I think. So yeah, something to bear in mind there. Sorry, that was a very long-winded way to potentially answer that question. But it has got me thinking though, because the way that I've ordered these slides now, or webpage, so in completely the wrong order. So bear with me as I jump around. But there is, for any of you that have been watching this or been in Discord for sort of 6 months or so, you'll know. I'm coming to this. I can't find it. This is the Vimo. Why did it scroll up? These are obviously all the videos that you can do on Vimo. Here we go. So on the 14th of November, and then again on the 28th of November, I was doing some calls about whether or not we are seeing a left-leaning 4-year cycle. Okay? And I'll be honest with you, that is still where my thought process is going. And I can't shake it at the moment. And there's a few things that are obviously driving us to suggest that can be the case. Now, quick 101 as to why I think they are left-leaning. For those of you that have seen it, and I'll get onto the evidence, my concern was actually the 2021 cycle peak was actually in April. And there's a lot of on-chain data, a lot of indicators, whether it be things like RSI, whether it be volume, whether it be Bitcoin wallet addresses, and all that kind of stuff, that actually suggest that this here should have been the market top. And this run up here was caused by Duke One, Sam Bankman-Fried, and the rest of the cronies just artificially inflating the market until it actually broke. And then they spent the better part of 6 to 12 months covering their asses here as the market fell away, but ultimately it really fell away. And that suddenly shifts a lot of our narrative, because a lot of people have said in the past, well, wait a second, November, December, and November, December. So the past 3 peaks have all said that we've had that in November, December. So that literally means that we're going to see 2026 optimistically at 300,000 November, December. And I'm one of them as well. Don't get me wrong. Don't change a record. Don't change a piece of equipment, whatever, until it breaks. That's what's happened in the past. That's something we should think about. And I'm always one that says, despite people saying this time is different, because they said that in 2017, they said that in 2021, and yet it still came out the same. So ETFs or not, bearing in mind what I've just said, is this time really different? But I can't seem to shake that feeling that actually maybe this time is a little different, because it feels like it's different. Why does it feel like it's different? Let's get rid of all of these. Well, let's take the first thing. We just hit all-time high. And as exciting as that is for us, and for those of us that are fully in the market or got a nice bag of Bitcoin, etc., that's a nice thing to see. But for those of us that are staunch believers in the 4-year cycle, and I'm one of them, this is why I'm getting conflicted, that all-time high shouldn't have happened. We've not had the halving yet. Never in the history of Bitcoin. Well, I mean, the first year before the first halving, everything was an all-time high. But since the first halving, leading up to it, never have we seen an all-time high occur prior to the halving. And it's happened this time. Why is it happening? And one of the reasons it is happening is the ETF hype. And yes, the ETF are buying it up. There is not enough demand for what the ETF are providing. I put it in Discord. I wish I'd found it. But basically, the ETFs are buying anywhere around 8,000 to 9,000 BTC a day. We only mine 900 BTC a day. So just bear that in mind. And come April, that's going down to 450. And so that supply squeeze, and we've seen it, whether or not they're fake, where people have been posting pictures, I think it's Cash App and all that, saying basically you can't buy Bitcoin. It's no longer a guaranteed price. It's price on application because they don't have it to sell it to you. We've seen reports that OTC desks have actually gone dry today and there is nothing left. I think on Friday there was 41. That's it, 41 Bitcoin allegedly left on the OTC desks, I think in Binance, because obviously all these exchanges do OTC. So there's that supply squeeze that's helped to drive the price up. There's the FOMO around the ETF that's helped to drive the price up. But take all that news away, and what we're actually seeing is we're seeing an almost borderline parabolic run starting prior to the halving, which calls into question, at some stage when we got on the higher time frames, we're going to see some exhaustion, which is going to potentially see a blow off top, much like what we'd see in either, you can call it that one, or if you want to say that was the original cycle top, but even if you discarded that one, the blow off top that we saw here. And that correction, because we've previously worked the timings out based on the halving day, means that we could significantly be leaning to the left. Why is that important? Because a lot of my plans, and I assume a lot of your plans as well, are not anchored on a Q4 2026 departure, but they're very strongly rooted. And that means that we could be missing a really big awakening, a canary down the coal mine type of event, in which we think, okay, it has pulled back, but I'm not selling because I'm waiting for my time in December. And that it just keeps on making me think. And I think, I don't want to just dedicate the whole one of these to it again, because I don't think I've got anything particularly new to add to what those two videos were out there. But it is something that I'm going to continue to keep on looking at, and to try and determine whether or not we are getting close to the top. And I'm trying to find which chart it was. One of the great ones, the pi cycle, the previous indication of cycle tops when these cross. Again, that happened in the April one, not in the November. Now, we're nowhere near a crossing happening here, so we don't need to get too excited at the moment. But this will be a canary in the coal mine for me, because if this starts to cross, and we'll get a good indication of if it's going to cross, weeks, if not months before it does, if that's significantly before 26, the end of 2025, then I'm going to have to think very carefully about whether or not it's time for me to exit the market, or whether I do a decent sized exit at that stage and just wait and see. So It's not the only thing I'll be looking at, and I would never trade just off one data point, but it is something that I'm definitely going to be considering. Just get rid of that there. Go back to what it is that I'm missing. So we've got these halvings, but let's have a look. So what I have put on here at the moment, you can see, hopefully, that's we get a bit. We've got a bit more room. So don't necessarily worry about the size of the candles. It's more the yellow lines that we're looking at. We've got the first halving event, which happened on 28th of November 2012. The second one was the 9th of July 2016. Then it was the 11th of May 2020. And this one is circa 21st of April 2024. Okay? Okay. Now, what a lot of people have been saying is, we've never really seen a run-up like this leading up to a halving. But actually, I'm not trying to contradict myself. I just like to try and provide a balanced view. I'm calling a little bit of BS from that. So in the year leading up to the halving, we went up 500%. Yeah, there are pullbacks, okay? And at one stage, we actually went even higher than 500%. We went 650, but we did pull back down. But from the bottom to the actual date of the halving, it was about 550%. We moved to the next cycle. This is now going up to 2026. And again, from the bottom, we did go a little bit higher, so we pulled back into it, 310%. Well, that's still a fairly decent increase there. And it also aligns with the diminishing returns of each cycle that we've talked about before. So we're still seeing a fairly decent uptake. I mean, 300%, not too shabby. But yeah, a decent climb. We go to 2020. Now, this is an interesting one because of the old COVID scenario there. But again, bottom of COVID to the halving, it was a 155% increase. So it doesn't feel as big because I'm talking about going from 3,800 to 8,000. So 3,800 to 8,000 doesn't. 9,000. Can't remember the figure. Probably can if I just 10,000. So from 3,800 to 10,000. So, that's what we've lost today. But in principal percentage, that's the move we made. And we have a look at and the only difference here is this was shorter. This was actually only 63 days, while the other ones have been pretty much a year. And this one, again, okay, it is shorter. I'll move this across one. It's not a full year. It's 250 days. But actually, from that bottom to, we don't know where, I don't know what the price is going to be. I'm just going from all-time high. That's 164%. Now, again, all the other ones have rallied up and then pulled back slightly. So maybe, and this is not the point I'm trying to make, maybe it does pull back. Maybe it's another 150% is what we see at the halving. What I'm trying to say is, yes, it is unusual that we've hit all-time high prior to a halving, but a run-up leading up to a halving is not unusual. Matter of fact, fairly normal. So I think, much of that decision I need to make on that left-leaning cycle peak probably is going to be what happens between now and the halving. That's 6 weeks. Do we get that pullback or do we just keep on going? When I mean pullback, I mean significant pullback, 20, 30% with some consolidation, building that market structure back up, leading us in. And if it doesn't, we just continue going up, then I will continue to dig in, have a look, see what we're going to be doing with the event. Okay, one other thing from the halvings, and that is price vomit. We're getting into American Coal. I'll get to your questions in a moment, but thank you for them both. We're getting close to halving season, so you're going to see all sorts of things thrown at you. And this is a very white screen, so I'm going to try and get what I'm going to do. So I'm going to move it over here so that you don't have to just see the whiteness on my face there. We'll go back to this chart, wherever it was. Lost it. Here we go. So what it was basically saying, and what you're going to see now is what was the price at halving and where was it a year from that? Why is that important? Because it's a fairly decent metric in terms of timeframes. So let's just run that date out. Date and time out. Let's get down here. Date and it's just gone to date range, sorry. Date and price. So from the halving, we want 364 days. Look at that. Market peak. Year from it. Ooh. That was probably luck more than anything else. This one is longer. So it was 520, but where was it at 365? There we go here. And then this one. $350. 65. Okay. Okay. What do we say? I think I might put that low. Sorry, I should have prepared that one beforehand, but I just knew it was going to have a lot of information. What I am going to do is delete these, so it just makes it a little bit cleaner. But what you're going to start to see is people talking about how much the price moves within that year. And it's a metric. I don't know why people cling on to it, but they do. But what's quite impressive, though, is when you look at it. In the first halving, the price at halving was $13. Okay? In a year that followed, it got to 1,152. Okay? Massive increase. In the second halving, it was 664. By the year's peak, it got to 17, or it's 20,000, wasn't it? But within that year, it got to 2,700. Okay, so again, 5x there. So we had pretty much a 10x, then a 5x. And then from this one here, we had it at 10,000 circa. And then within a year, it got to 60. I think it dropped a little bit lower than 55,000. So again, about another 5x. Okay, and the point that people are now going to be ramming into us is depending on what price this gets to, they're going to be saying, well, we're easily looking at 3 to 5x within a year's time. There's no proof that necessarily says that it's going to be that. But you know, that suddenly starts to call into question a lot of our other things. Because if we're going to stay at 69, 70,000 and we're going to be getting a 5x, that's going to be cool. People are going to be starting to talk about, you know, highs and peaks in and around 300 to 350,000. And we roll out 365 days from where the halving's going to be. Okay. We're talking around about an April of 2025. Now, is it? Yeah, April 2025. Now then, we start to come into, again, feeding back to what I was talking about. Is that a left-leaning cycle? Because that's 6 months prior to what we were talking about. Again, I'm not trying to suggest that it is. Actually, it's going to lead into one of the questions that someone asked me later. But people are going to start talking about the halvings out. They're going to start talking about what the price is going to be. And the other thing they're going to start talking about, because we just did it today, is what old Dylan McClare took the time to work out and tell us. The time it took BTC to double after previous breaks of all-time high. So in December 2020, it only took 18 days. I remember that. We ripped from 20,000 to 40,000 in 3 weekly candles. I thought it was 3 actual weeks, but just shy of that, 18 days. March 17, that was the outlier there. It was 84 days. It took to get from, I didn't measure it out. Which chart did I put it on? Not that one. Okay, I don't know which chart it was on, but I didn't measure it out. But so we broke the all-time high at 1,300, and by the time it took us to get to 2,400, yeah, it probably was about 7 candles. I can do it with this, can't I? 70 days. I think I'm right. 84 days. There you go. That's where you got it from. November 13, 10 days. This is what people are now going to be saying. Well, that's it. It's game over, isn't it? We're going to double. We're going to be at 140,000 anywhere from 20 to 90 days, the next 3 months. I don't quite think it's going to be there yet. I think we do need to sort of very strongly caveat that. But obviously, each of those all-time highs happened after the halving when we had that supply shock. Now, we've still got a supply shock. You know, we're only getting 6.25 Bitcoin every 10 minutes. When that drops to 3.125 every 10 minutes and circa 450 a day, then yeah, that could lead to that supply squeeze that we're talking about, driving that price up. And you know, that's something that I'm certainly going to be looking out for. Right, let's go back to some of those questions. I'm expert. Do you think we could have a repeat of the first cycle where there was an all-time high, a dip, and then another all-time high? That must have caught out a lot of people. Those who hodled would have been okay. So actually, you can talk about either last cycle or the first cycle. But yeah, let's have a look at that. So this cycle here, we did have that peak, this run up, and there's about a 6-month gap between it. Okay, we got up to 261. Okay, then we dropped all the way back down to 61. So huge correction there. Minus 74 correction. But within 6-7 months, we were back up for a new all-time high. April, December. Well, wait a second. That's exactly what happened here. Because of that huge run-up and a blow-off top in April, we had a monster correction. I know I can zoom in. I will do in a second, but I've committed to this bit now. 55-60%. Yeah. And then, come November, December, we had another all-time high. So, now, I mean, how do we know what? How do we realistically know? I mean, I'll tell you what some people on crypto Twitter are going to say. Well, this was a cycle 1. This was a cycle 2. We had another cycle 1. So, Sod's Law says we're going to get cycle 2, and we're just going to get a parabolic one. So, this will be an easy moonshot. It's bollocks. We don't have enough data points to know if that's the case. We're just going to have to be sleuths. We're going to have to be detectives and try and work it out. And there's so many different factors that we're going to have to take a look at. And, it's going to be hard. It's going to be hard to make that call, because if you make it wrong and you take money out and it climbs up, you're never going to forgive yourself. And likewise, if you hold on to it for a bit too long and it never recovers, then again, you're going to have a similar situation as what a lot of people did in 2022 and missed 70k and didn't get out till 40,000. And RT wasn't that great at getting out of it either. I think the final big call was around about 40k. It's because of the time debacle, obviously. I think I took mine out between 48 and about 42,000. I think I've said a few times on that. So you leave stuff on the table. Colts, but honestly, could be a mid-cycle top, one of the biggest bull runs we've ever seen. Yeah, absolutely. So the other thing, as Colt said, is you might just be seeing that is what we had with this one. Just a mid-cycle run up, and then we're going to see it coming back down. It's going to gain some great structure, and then see it. And obviously, don't take the time arrow, but I agree. Yeah, good. That's the point. We don't know. Which goes on to this next question, which I'm glad we're moving on to. I'm expert. As many of us now in the market full time, many of us quit our jobs or on a career breaks. Harry, could you please kindly share with us your daily and weekly routine to doing this full time? Waking times, breaks, exercise. I get burnt out at times from watching YouTube and charts all day, making decisions regarding the portfolio. Using my full brain time can be fatiguing and as is often lonely. Any advice, tips, what you've learned? I'm sure this will help us. So I think that's a great question because I have kind of shifted to doing this full time. And I'm amazed at how much of my time it does take up. And you're right, if you don't have some form of structure or something that you're wanting to achieve out of it, it can be like looking at a headless chicken. And I could pick up the camera and show you. But when I started, I thought I was Gordon Gekko. So I have 3 screens at the moment. I could plug my laptop in. That would be a 4th screen. One of the screens is permanently turned off and I never plug my laptop in anymore. But when I first started, all of them were going. And there was information on all of them because I thought that's what I needed. But I soon found out, like you said, that actually burnt out pretty quick. It's hard to take in constant amount of data in a market that doesn't stop. Maybe you could do that if it was just Forex trading. You get a break on the weekend and a break each even. But the reality is that with crypto, if there's something you want to do full time, unless you're disciplined, it suddenly does become a 24/7 job. And one of the biggest things that I did, because it really was affecting me, was I stopped day trading. And the day trading was killing me because I wasn't getting any sleep because I was waking up in the middle of the night checking on trades because they were open 24/7. And it really was very difficult to manage. So I did try and provide some structure and I'll try and run through it. I mean, I got kids, so waking up is early. 6 a.m., 6:30 if I'm lucky. And then after you've done school runs and everything else, so I'm not really looking at a chart most days until 9 o'clock. I will kind of tell, whilst making breakfast. I mean, I can have a look at, I've got an app on my phone, which on the main screen will tell me what the price of Bitcoin is. So I can see it even when it's, it's off, not off, but, I'm not using it. It displays it. So from that, I can just gain an understanding of what's happened the night before. And if it's suddenly down 95%, then yeah, you'll be sure shit I'll be doing something. You can find an excuse not to take the kids on the school run. But generally, I'm trying not to do that. I try and just do the school run, get the kids ready in the morning. And if I'm honest, I have incorporated some form of exercise, which is either a dog walk or going to the gym, and I do that every day. And normally that is 9 till 10. So I don't really get down to sit down and do anything until 10 o'clock at the earliest, normally 10:30, but I've had breakfast. And then, I what I tend to do is I have my main screen, the direction of the camera that I'm looking at, and then I have a side screen off to the left. The side screen off to the left just has Discord open and things like WhatsApp. And that's it. And then the main screen is, I try and keep it to just a single web page. It doesn't always work like that, of course, but I don't have what I have here, which is like 70 web pages over. And I just try and set myself little things. What is it that I want to do that day? Is it something boring, like it's portfolio management? Okay, right, let's have a look. So I need where my portfolio is. And in the days before Delta having a desktop app, that was very much me having to do it on a spreadsheet or using the information on the screen and plugging it in on my phone, going through all my wallets, going through all my exchanges, just making sure that's there. So trying to set yourself a task, it's easier for me and maybe for you if you're in the market full time, because now we've done the hard work, and the last couple of years was the hard work. Now it's more about knowledge building. It's more about, understanding where we are and just trying to get that better mindset for exiting the market whenever that may be. Whereas during 2022 and 2023, I was focused very much on protecting what assets I had and trying to find an ideal time to deploy them in. So my days was definitely very disjointed. I was trying to sort of understand where that is. I, like you, spend a lot of time on crypto Twitter and on crypto YouTube because I want to understand things. And I'm the type of person that visually understands things. So watching content helps. But the problem with watching content is my phone's in my hand. And so I still do it now. I'll watch something on YouTube that I really want to watch. And I'll be looking at my phone. I'll have to go back and watch it. So I do try and just leave the phone to one side. Bearing in mind, Discord and WhatsApp are already up for me. There's no real reason for me to need to look at my phone. I think it's just human nature and instinct. But spend a bit of time just watching YouTube. And I'll be honest, it's not always crypto stuff, because sometimes the crypto stuff, especially if it's not being explained well in a video, and that's no slight on people, just I may not understand it well, it's quite hard to take in, so you just need a break from that. And again, you're working from home and you've already put in it does get quite lonely. And so I have, other ways of doing that. Discord for me is a great way to just break up the monotony of not being around. I can just message people, or I can, start a conversation or answer conversations and questions, and you feel like it's not as rewarding as actually having a face-to-face conversation with someone I get. But that's also, again, what WhatsApp's for. So I'm in groups in WhatsApp, which are, like-minded crypto enthusiasts. We'll chat about stuff there that maybe I'm more interested in. And I know there's not much interest in Discord, so just save it for there. Or just chat to people normally and just try and break it up. You've got to try and make this as painless as possible, because if you're like me, you sat in front of your desk for 8 hours a day looking at the screen and looking at bars moving up and down. One thing that I really don't try and do is look at the charts. That's the problem I had before, and I had the charts on one screen constantly, and you just find yourself looking that way. So I just have the charts open as a tab, but I don't have it as my main element that's on there. I am surprised at how it goes. I'd still pretty crap at things like taking some structure of, breaks. I will go and make myself lunch, but then I'll eat it at my desk, whereas actually I probably should away. But then, come 5 o'clock, well, actually it's not even that. I'm on the school run. So come 3 o'clock, I'm back looking after the kids. And so I'll have a break till maybe 6. Then I'll quickly just check if anything's happened, anything needs my attention. If it doesn't, then, I'll chill for the rest of the night. But unfortunately, and I don't regret it at all, but our community is international, and so I get questions asked at all times of the day and night. And if someone asks me a question, I have to answer it. If I see it, I just have to answer it. I mean, if I'm physically out and I can't, then I'll normally message them, say I'll answer it when I get back. But that's just the type of person I am, and it's a curse, because if one pops up at midnight and I'm just about to go to bed, it's like, no, I've got to finish it. Otherwise, I'll just be lying in bed thinking about it. But then there's days like today. So on an Avenger call day, very much focus on what I want to talk about. And you know what it's like with price action. I end up talking about 3 different things that I didn't want to talk about. So it is a bit disjointed. And the point I was trying to make last time is, in the last comment about the left leaning cycle is, now that my portfolio is 90 odd % deployed, and it needs a little bit of tweaking. I don't make huge swings and jumps like Simon does, but I sold my claw and a few other ones a few days ago because I just knew it felt right. So there's sometimes that I do prune little bits to it, but it affords me the opportunity now to do things like those spreadsheets, which again still need updating. I've got to just do those, or have a look in more detail at where a left leading one could go and what indicators can be. And it may be a whole day wasted because it turns out I just don't know the answer, but it's just something for me that I can do. Doing those spreadsheets, unfortunately, it's 400 data entry points and I can't data scrape it. So that's it's probably more than 400. It's about 1,200 because each of them had 3. So that takes a full day to do. So just stuff like that. But it's stuff that's interesting me, and hopefully it's a benefit to you guys. So I kind of see it as a little bit of a plus. But what I would say, if you are doing this full time, you don't need to be at the charts 24/7. You really don't. If you're nervous about it, you can set alerts. And I'm not, go on Vimo. There's a tutorial about it, but you can just click the alarm clock, click add, and you can create an alert. And I've gone through how to do that on Vimo, so I'm not going to go through it again now. And that'll ping to your phone. So if you need to know something, you don't need to be there. And I'd say this is an ideal opportunity to, get that work balance back. If this is your job, yes, you need to make sure that you are getting paid, however that is, whether it is because you're guaranteeing you're going to pay yourself in the future by positioning yourself correctly, or if you take a little bit out each month, fine, however you do it. But I found that my work balance is so much better in terms of being able to help out, spend time with the kids, or do things that I want to do. Friday in the morning, I went to watch Dune 2 because I thought, sod it, I want to see it, and why not go in the morning? It's a long bloody film, and the kids are at school. So, I can do that kind of stuff. Anyway, WhatsApp groups, a big part for not feeling lonely for me. Yeah, I agree. The WhatsApp groups, whether it is talking crypto or it's just talking with like-minded people and friends and that, it's such a big help for just breaking up. The other thing that I do is I watch a lot of podcasts, and I kind of have them on in the background. I don't need to necessarily watch them, but it's just because I want to have that noise. I'm so used to working in an office, or had been, you just use that background noise. So like Joe Rogan, I pretty much watch it every day, regardless of who he's got on. And yeah, I find that helps. Now, I can't tell you what happens all the time because I am more focused on something else. It's a bit of background noise. So it might be interesting. I'll stop for 20 minutes to listen to it. Anyway, hope that one helps. Alex's book, Can You Cover Crypto VR? Okay. Well, I'm going to go back to Chris's first. Okay, how are we doing? So Chris wanted me to have a look at Inspect. So Inspect, this is it, I believe. We'll go to the website first. So what is Inspect? Well, you go on the website and it sounds pretty interesting. A layer 2 built for X, or Twitter, as I always call it. And what does that effectively mean? Well, this is a downloadable browser extension that you can connect to Twitter, which will effectively collate a lot of data related at the moment to cryptocurrencies, which on the surface sounds quite interesting because, Twitter's vast and there's loads of crypto influencers out there that may be providing great alpha that you just don't have access to. Whereas effectively when you can do it as a desktop app to just have a little play around, but you can put it into a search engine and it'll collate information for you, but then it will also provide further information either about that individual or about the subject that you're searching or whatever. And again, that kind of sounds good. But what I have seen within there, the focus very much seems to be at the moment is kind of on NFTs, and then DeFi is another element within that. So that's not something that I'm particularly in. I know it says level up your trading DeFi and NFTs, but certainly a lot of the videos I've seen and the sort of the user guides, it's very much focused on NFTs and getting that NFT data there. So if that's your bag, then this could be a very useful extension. And, as that rolls out into other elements that they're able to, use, and it uses AI to get that information. I wouldn't necessarily call it an AI token as such, in my opinion, but I must admit I haven't looked at it in a huge amount of detail. Some of the issues that I have before we have a look at tokenomics and price and everything else is, I suppose, for anyone that, like me, who uses crypto Twitter, crypto X a lot, there's a lot of bullshit out there. I mean, how many times have I been on Discord with, look what someone said, and then I've scraped one search engine run through and just totally disproven it. And I want to know how they combat that, because it's all well and good getting alpha, but if that alpha is worth absolutely, it's omega, it's worth nothing, it's right at the end, then what's the point? And so that could lead you down the wrong route, and particularly with trading. You know, I mean, there's a lot of people come up with some very convoluted trading systems, and there'll be people in here who think that I can't trade, and I've never said that I can. So just how you're going to be able to utilize that to actually benefit yourself, I'm not necessarily sure. The other thing, and I've got to say, is why does this need to be the cryptocurrency? The currency side of it. I don't really understand what the necessity for having a token, and certainly a token that has some monetary value, is. Yes, there is an element of a DAO within there, but other than that, I mean, it's a free downloadable browser extension. So where does that element come from? And that's something that I need to understand, and I need to go and have a look through the white paper. But it's got some buzzwords associated with it, because it's got things like, it's associated with NFTs. Whether or not you liked them, they were huge in the last cycle. If they can start to move towards DeFi, which I think will be big again, it's obviously linked to X. And they had a big announcement today that they're connecting with Forbes as well. So maybe they're already looking to branch out there. So maybe it does have an opportunity to branch out. In terms of it, it is a relatively new token. So it's kind of ranged, it launched at 27 cents. It got all the way up to 34. We're seeing it back down at 22. It's available on KuCoin and Bybit and Mexi. So a lot of the sort of tier twos that you would expect to see it on. So fair game there. In terms of use crypto rank, and I need to go through it in a bit more detail, but vesting, there's a lot of unlocks. There's one of them happening tomorrow for about 6 million. There's linear and cliff unlocks, and tokenomics at the moment is only 19% out in circulating supply. And over the next 12 months, we're going to see, I think it's around 30 to 40% of that right out there. So there's certainly going to be plenty of opportunity for more liquidity coming into the market. So yeah, I'm sorry that I haven't been able to have a look at it in a lot more detail, Chris. But I personally am not going to be investing within it, certainly not yet, because I haven't used the app as such. I just didn't want to connect my browser extension to it without actually knowing what it was, and I didn't have much time to play around with the desktop app either. But I just need to understand what their real unique selling point is and why it needs to be a token. I think it could be a great browser extension, and even if you have to pay a monthly fee for it, it could provide some utility. But the whole point of the cryptocurrency, not saying it's bad, I just need to understand what it is. And then Alex wanted me to have a look at crypto VR. Assume VR. Victoria VR. It's the only one that says VR. So apologies if this isn't it. There's rank 418. VR and AR. So I'm assuming it's virtual reality and augmented reality. It's got NFTs. Okay. Looks like it's some form of game. I tell you what, Alex, this probably is worth a bit more of my time looking into. Can I just talk about this next week? Because I'm going to have to read a white paper, and I've not looked at this at all. So I don't really know too much about it or what it is. I don't know, how the VR and the AR works, or even if it is a workable element of that at the moment. I think it's better for me to just dive in off the call. I don't think it's of that much interest to everybody whilst just watching me in silence read stuff. But I'll add it to the list. And Alex, but are you happy to show your crypto portfolio, please? I was happy to show it, and I would be, because we've now got the Delta app. However, maybe it's a bug my end, I need to uninstall it. But if on my phone I click on the portfolio the pie chart section, I can see a breakdown of my portfolio quite perfectly. But when I click on this one, it just takes me back to the download page. So I don't know if that's a bug within there. I'll post it. I'll write it in Discord for everyone. I'll post it out there. But effectively, where am I currently sitting at the moment? Let me just get the Delta app up on my phone. I'll kind of run through things. I used to do it on the original amount that I invested, but it's now obviously based on what everything is worth. So Polkadot's around about 25%. BitTensor's probably around about 20%. NEAR is going to be around about 15%. USDT, because I did do have some in the sidelines still, around about 8%. Ethereum, because I sold quite a bit of my TauNu, although I've been buying some of that back. I sold it into Ethereum, so that's now worth around about 8%. So is Rose, and Glimmer's about 5%, and Render's about 4%. And then the rest after that are sort of getting down to 2% and 1%. That's just of the personal side of things. From the business point of view, it's all 100% Bitcoin. So that's where it is. The biggest change that happened, which I did tell everyone about a few weeks ago, I did sell my Bitcoin. Some people might suggest that I sold it a bit too early, around about 50,000, but I wanted to move that into things like Tau and a few other things. So, it is where it is with that. I'd been buying it since 15, 16, and 18,000. It felt like a good time to move it across, and so that's what I did. Okay, I think that's the end of the questions. So where is Bitcoin at the moment? I mean, in the time we've been talking, we've gone from, it did dip below 60,000, didn't it? He said 59. But, in the last, 6 hours, we've gone from 70k or 69,000 down to around about 59,000. We bought that back up at 65. This is the chart that most of you will be familiar with because it's the one that I've been building for the last year and a bit. And there's nothing really to get nervous about at the moment. Not in my mind, anyway. We are still significantly above this impressive trend line that we've been talking about for ages. I have been onto high block. I've had a look at where some of the areas of interest are. And to be blunt, there's nothing really near us at the moment, of a significant level anyway. Things need to build up. And so, this move down, I think, is just the volatility that we absolutely needed. And, thank you for everyone that did contribute within the chat. It seems 50% of you feel that the move down to around about 50%, circa 20% drop is where we're probably going to go. And I'll probably suggest that that's the case. Now, I'm not going to take the 59 as that's where we are now. That's the current levels. I'm thinking about a more determined move down that way. But if we actually start to have a look at where some of the things are building up, let's take the EMA off for a moment. So these are the levels of interest for high block. There's nothing really to the top at the moment. We're suggesting that the people who are shorting are having to build it back up. That claiming of all-time high wiped out a decent amount of shorts in and around there. So I'm sure this move down on the micro scale is going to have taken out a lot of longs as well, especially with people getting excited, from 60k leading up into the all-time high. Let me just collect my thoughts. But the point I'm trying to make is this trend line at the moment is, extended out to today, is still around about 50,000. And between there, we've got a block of interest, 63,000 to 60,000 where we're at the moment. Then we've got 53,000 to 51,000, which is also an area of interest in terms of where there are some long liquidations, more persistent long liquidations building up. Go on to that, the EMA. And the 50 EMA, again, is in and around there. Now, that move sub 50k, whilst it obviously could happen, is going to be a very significant reason for it to get down there. And I think if that were the case, then I think we'd be looking at maybe not a black swan event, but certainly an element of FUD that's going to help us to move that down. Like I said, all that we've really done today is wipe out what happened yesterday. And so as this daily candle closes, if it was to close here, I don't think there's a huge amount of concern right now. It will be sort of how things react over the rest of this week and where that looks to go. The fact that we have, bust through, but now found support initially on that where we found ourselves at the back end of last week, I think there is, from a short-term point of view, an element of reassurance around that. Now, let's just get onto a clean chart. Okay. Let's just delete that. If we want to try and take some moves up and have a look from a fib retracement point of view, let's start down here and see what it does. I mean, even from this one, body to body, we have had that move down to 60,000, just a 236 kind of level. We've seen that reaction that's come from that. So for me, just straight from this, obviously that level's been hit. If we're going to lose it, yes, of course, I'm going to circle that one. But the real one that I'm looking at is a 0.5. And I know I like a 618, but the 0.5, stupidly deleted everything, ties in with the top half of... but let's go back. Sorry about that. It's on the monthly, that's why it looks a bit weird. Better. I think. Was that on the daily before? I wasn't it? Yeah. Sorry. Apologies there. I'll just take that fib just to illustrate the point once more. There to there. Look, the 0.5 at 52,000, okay, it was a 51,997 last time. It just ties in with where the EMA is going to be, this kind of level here, in terms of that liquidity level. That's where I'd see, a fall. And bear in mind, it's on the daily, it could take weeks for it to get there. We're going to lose levels. That's where I'd see its next big bit of support. After we lose this, that rise up, 2 weeks ago, a week and a half ago, was so strong. Last week, actually. There isn't really much between it, so we do start to lose that 60,000 properly. I think a move to 52,000 is kind of the next logical level, and that's certainly where I'd be looking to sort of build positions. What the equivalent of that would be in altcoins, I'd have to wait and see, or I may buy a little bit more Bitcoin back. I actually, maybe a smart thing, held off my direct debits for the last 2 months, so I've got a little bit in the business account to buy back in. So yeah, we'll see where that one ends up. Certainly the one that landed today is a smart move. Maybe the one that landed beginning of February, not so much. So on a balance, maybe just balance each other out. Jesus, it's 20 past 9 already. Let's have a look on go back to that clean chart. Let's go back to some smaller time frame chart. I mean, this is the daily, isn't it? We've had this rise up, and then we've had that blue vector candle, and then it's immediately been recovered with this one. And then that's something that we didn't get to talk about, but prior to this, the last vector candle from the previous bull run was taken at 63,000, I think. So we've got nothing left up north, which is an unusual position to be in. Let's drop it down onto the 4 hour. And again, move up. And this is the one, this was the all-time high move. And it was such a, I think a very obvious position to place a short. It was a breach of all-time high. And it must have taken, because the euphoria around it, I was part of it. I posted in Discord some fireworks about all-time high. Retail would have got euphoric there. And it's just so easy for market makers to go, nope. Take that one back and look on the 4 hour side where it dropped down to 50 EMA. It's found itself a home and it's bounced quite nicely from that. So another strong move back there, but equally a decent recovery here. And we'll just see how far this one goes in the next 2.5 hours to where I see that being. But yeah, that one felt like a fairly simple move, and I appreciate I placed along today on IMX. Which did get stopped out. I mean, I was using BitGet. It's the first time I'd used it, so I didn't put much. I lost $15 in the end. We'll chalk that one up to maybe a bit of it over exuberance, but I did think there was an opportunity for a play. I just, wasn't really paying attention to it when the markets moved, and that's why I don't really do it that much because I got other things going on in my life, especially on a day when I'm preparing for an Avenger call. But I will get back into them. And, that was just blowing the cobwebs off as such. Let's have a look at DOT because DOT's, DOT had a wonderful move up again on the 4 hours after forming this, W formation there. We've gone up. We've had some strong moves up, but we finally had a meaningful retest. Meaningful retest of the 50 EMA, and then looking to start building from it. But in terms of just, it's finally woken up, which, for me, long-term holder and a long-term member of DOT, I think is good. And, yesterday, I think I posted in Discord, it was even trending on Twitter, Polkadot, which it's good to see. There are a lot of people that still believe in it. We were just waiting for actual some movement there. We're starting to see Polkadot 2.0 starting to roll out. There's things like Snowbank, which I've never really got to talk about, but, providing that liquidity and that cost shade towards Ethereum. I think that's been released on the Kusama network this month. And obviously that's just a test net. We'll look forward to that rolling out next month. So I think fundamentally there's some good stuff there. From a price action point of view, it's certainly done very well. And yeah, it needed a pullback. But go on, we do it with all the others. Let's just see. Take it from down here, this base to there. Okay. Landed in between the 382 and the 0.5. Not necessarily help there, but we did get all the way down to the 618. So, for me, that would have been a great buying opportunity for those of you that aren't in. I still think this has got significant legs to go. Give it some perspective. Hide all. Do it on the linear, because it is a shock and awe when you see it on the linear. We've got some way to go. This is typical of a lot of altcoins, don't get me wrong. But yeah, definitely got a way to go. 55.50 or something was all-time high. Battling in around that $10 level at the moment. What I would say, whether you're looking on linear or not, this is the weekly, but there's not much between 10 and sort of 15, 16. And then after that, we're looking at the 20s. And that's kind of a take profit zone number one for me. And I've gone and restaked all my DOT. So I actually now need to think about unstaking some DOT and moving it across somewhere else. So 28 days to unlock your DOT. That's something I need to think about. Tau, let's get back onto the linear and back onto the daily. So, I was going to say, where's everything? The Tau's just been doing what Tau does. And if any of you managed to get in today at around about 600, I think you've picked another pretty decent spot, because it has had a good move. And yeah, we may have been knocked a little bit back down around about the 730 level. But what are we finding ourselves being caught on again? Every single time, it is the 10 and the 20 EMA. And on the daily, they present perfect buying opportunities for anyone that is interested in Tau. And I think most of us in the group are. So again, I don't think that's had too much of a bad reaction to the Bitcoin move. And with Bitcoin recovering, but at one stage Bitcoin was down 10%. We're now just under 7%. Actually, Tau's in the green at around about 3% from where it started off today. So yeah, a nice positive move there. And I just feel that this one's going to continue to build up. Bitcoin does continue to crap the bed. I don't think this is disconnected. I don't think any are. I think we may finally see that retest of the 50 EMA, and I will always say it like a broken record. At some stage, we will see that retested. I truly believe it. Whether or not this climbs back up to 550, 580 before we do, fair enough. But we will see a retest. Same with Bitcoin. We'll see a retest, and this one's down lows, 51,000. We will see that retest. Ethereum. So Ethereum was ripping today, and look at how that has moved compared on the daily chart compared to Bitcoin. Why did it do that? Bitcoin's had breathers in that sort of period in mid-Feb. Ethereum, on the other hand, just thought, nah, I don't need a break. I'm just going to keep on climbing. But today it's seen some volatility. So it moved first before Bitcoin did earlier today. And we were getting to pretty close to 3,800 and 50, 3,800 we just breached before losing it. And it's obviously dropped down to 3,200. But again, a nice strong recovery from that. Now we know that the ETF's decision has been delayed, but I don't necessarily see that as a bad thing. I think people still think that this thing is coming. And I still feel like Ethereum has got room to run. Put into context, Bitcoin's hit all-time high of 69,000. Ethereum's at 4,800. 1,000 away from that. Got 25% still left to climb. And I think, market's still been bullish overall. I think that there are some fairly easy targets. And the fact that look at where we turned around right at the bottom of that vector candle. That vector candle recovery goes a long way back to end of December 21. A couple of years. pretty much the last one we've got to see there. But we've refreshed ourselves on the 10 and the 20 as well. So we've had some good resets there. And yeah, I think we might see it. Hey, how Bitcoin's doing today? 14% of you with a sharp recovery. Up and up and up. May well be the case. Casper, we talked about this a bit earlier. I hope people who were interested in buying bought it at 12 cents or in and around there. That's a great reset, and it's done. So, 12-hour, head and shoulders. Not only has it done it, that would have been taking it down to there in terms of the height of the neck to the heads. It's cleared it, but it's swept it and come all the way back up. It is still below the 50 EMA on the 12-hour, but not on the daily. And so I think that was an ideal buying opportunity for anyone that was particularly interested in getting in on that. And certainly for anyone wanting to top up their bags. The only thing that I am slightly alarmed at is just how poor it's performed recently. And I'm not like you guys in that I keep up to date with what's going on. So I have no idea if the testnet is proving problems and we're not going to see this launch life a little bit longer, if there's some fundamental reason why it's not performing as well. But there's certainly interest in people buying it because this thing got bought up quick. On the hourly, it's down and back up. So yeah. So that double top's played out. That's done now. Now we're just waiting to see how this candle closes. But I mean, people will see a beautiful low test and technically in a rising market, but it hasn't been in a rising market for a few weeks now. And so I just want to see how this does. Not for me, anyway. Anything else really worth looking at? Mr. Tacos, hey there, Mr. Tacos. Amex had good price action. I know it did. Mr. Tacos knows why I know. Not much you could do when Bitcoin flash crashes 10%. Yeah, exactly. And IMX. I mean, so here's the trade that I took. I don't mind. Let's just. Okay, that was what I was presenting. Oh, there's too much noise in here. Let's get rid of this. We don't need it. So that's what I was presented with, pretty much, on the hourly. And I was looking at, and then we were in some form of base here. I'm not drawing it perfect. Doesn't necessarily matter, and potentially some sort of return up to these levels here. We're close to the bottom. And so I placed an entry. Matter of fact, to pretty much 309. I had my stop at 227, which was basically below these lows. If it broke those, I was just like, it's probably not going to go there. Because it was low leverage and it was pretty close. Wasn't much in it. But the opportunity was obviously to take a profit. So I said take profit there. And I thought, yeah, we'll go with it. And that's the play. It went down and that was it. It was out, fine. That's what the stop loss is there for. Didn't lose my entire position, which, is what it's there. And it's not made that recovery back. It was a fairly convincing drop back down, and that's it. So I think the premise of the trade was right. Just unfortunately, that wasn't the time to be. And I suppose that's where my comment in Discord about mania, maybe that was just me being a bit over exuberant because I wanted to get back into it and I was trying to force it where I was kind of thinking there was some sort of correction coming on the cards. Who knows? Well, it's past. I'm kind of thinking I didn't get a chance to really talk about meme coins, so I'll just summarize it with Pepe and just say, well played. Well played to anyone that had the courage to go into. I know we're in meme coins with Tau Inu, and Tau Inu has had its run. But Pepe and Sheeb have had some fantastic runs. Bong has also had some. And we've seen some really big gains over the last few weeks. And, people have made life-changing money from not a lot by having the conviction to go with some of those plays. And, it is impressive to see. So, Sheeb this time last week, was 5 noughts and a 9. And we got to 4 noughts and a 4. So, 5-6x in a week with Sheeb. So, definitely an opportunity. I think a lot of us have picked our horse with Tau Inu. It has had a move up. The one thing I will say about Tau Inu, I noticed this on Deck Screener. I can find it. So when you go down the lower time frames, the 5 minutes, etc. Recently has, but the last couple of days, it jumps. Like you can have like between two candles, a 35-minute gap. There's just not many trades of it happening. So certainly felt like it was drying up a bit, which typically means that when one person comes along with even a semi-large order, it shoots it up, and same with a semi-large sell, it drops it back down. And so that's just something to potentially bear in mind, because if, like me, you were sat on quite a lot of profit, it's difficult to sell it. You have to sell it piecemeal to make that. But then with the Ethereum fees, it's just a balance of the two. But yeah, another one to have a look at there. I think I'm going to knock it on the head there, everybody. Hour and a half or so, and it's my wife's 40th birthday tomorrow, so I've got a lot to do to get ready for that. But I will give 30 seconds or so if anyone's got any burning questions. And just whilst we are, Alex, I promise you, I will go through and have a look at crypto VR. Oh, I didn't even see Neo. I'll have a look at that one next week as well. I will add them to the list. But doesn't look like anyone's got anything else to add. So once again, thanks guys. What a roller coaster of a day. Somewhere an all-time high, a 10% drop, and a 5% recovery on top of that. It's like nothing happened today, and yet so much did. I think 5th of March 2024 is the day we're going to talk about for a long time, because it's the day we broke all-time high. So we'll mention it every year. I'm sure we've got some exciting things to come. We're ramping up to halvening. I'm sure we're going to be talking about that a lot in the upcoming weeks. Trading pubs are back to normal. Simon's back from the ski trip. Hey, whoever went on the RT ski trip, let me know how it was. I think I'm working on the wife convincing me to go next year. Convincing her to let me go, should I say. So yeah, I hope you all had a great time. No broken bones or anything. And other than that, enjoy the rest of your evening. Have a good time. If you've got any questions, hit them up in Discord even. Until the next time, see you later. Cheers now.